Good morning. Today is Friday, October the 6th. The time right now is 10:37 and in the morning, of course. And overnight we have equity markets appearing to have found a bottom and it has stabilized, and this is ahead of tonight's all important non-farm payroll numbers. And over the course of the week we have the ADP numbers, which is a private number for employment, that we have seen a deceleration in terms of the job created compared to the month of August, and this is laying the foundation for a slightly lower than expected new jobs created for non-farm payrolls. Market is expecting 170,000 new jobs created compared to about 187,000 jobs created for the month of August, subject to revision, of course. And this is likely to actually be friendly towards equity, because if we get not such a hot labor market, it means that the Federal Reserve do not have the pressure to hike interest rates, and that could be construed to be positive for equity markets, or for that matter, all risky assets across the board. Okay, so likely today we're going to see a large rebound in most markets that has been under a lot of pressure of late. Now equity markets is no different. We can see the Dow Jones has already traded quite low, and this is creating a three-wave pullback pattern, as we can see on the chart here. And we have already hit equality at 13,000 33,000, and this is actually laying the market for a bounce to the upside. Okay, how much it will bounce, it all depends on how the numbers actually translate to price action going on in the evening. Okay, over in the S&P 500, we also see although the market has failed to hit equality, it was pretty close, 4,216.45 in the cash index in the S&P 500. It's not that far away from 4,205. Okay, so we have about 10 pips, 10 points away from the ideal level. And even if we do get a dip back, I think the market will likely hold at 4,166 to 4,195. And that is still a possibility, but I think by and large, before the end of the close of the day, I think we should see a bit of a rebound on profit taking going into the weekend. And over the Nasdaq 100, same thing. The market has yet to hit equality. In fact, it is by far the firmest of the three major US equity index. The market has actually currently trading at 14,723. And if we do get a dip, I won't be surprised as well, because the ideal levels is actually 14,216 to 14,375. And by and large, I do expect a bounce going into the weekend. Now, over in Asia, we can see that Asia, in terms of the Hong Kong markets, has seen a rebound, and this rebound appears to be pretty strong. And unless market can trade above 18,000, there's very little scope for market to actually go much higher. So again, this is a market that has been coming down gradually over the times, and the lowest so far is 17,133 in the futures contract itself. So basis the futures top side is about 18,000 to 18,100. Okay, and over the Nikkei has also rebounded a little bit, but market has not been charging much higher this morning. I think the market is getting cautious. Even though the market may be rebounding, I think the top side is still going to be capped at 31,500 to 31,600 levels. Bottom side, I think there should be a retest of 30,300 going into the next few weeks. Okay, so I think the market is generally soft. Okay, and in the dollar itself, we can see the dollar has pulled back steadily since hitting a high of 107.04, and this pullback is so far deemed to be a corrective pullback. Nothing to worry here unless the market accelerates to the downside, which is highly unlikely. But again, unlikely doesn't mean that it won't happen. So again, very much depend on what kind of numbers we're going to get tonight in the non-farm payroll numbers. But by and large, we should still see dollar being bought. Okay, and in euro dollars, we have seen a rebound. The rebound is very tentative. The market has already rebound back in a three-wave rally here. And I think the top side here will be quite limited, honestly, unless the market can take out this level here, which is at 106.16. So let's see whether that can actually happen. But downside is actually still very wide open. Over in sterling, we did see a marginal break above the downtrend line here. Okay, this price channel has been broken marginally. Again, we will have to see what impact it has. Unless the market takes out this high here, which is at 122.71, then I think there will be nothing to worry about, because I think at the end of the day, the dollar is still going to remain strong for the foreseeable future. And over in the Aussie does has a bit of a more robust rebound among all the other principal currency. The low is 0.6285. The current level is at 0.6378, and it does look like the market may be gunning for the 50% mark, which is just under the 64 cents level. Okay, and over in dollar yen has seen a bit of a profit taking, but still very, very much in control. This move here that we saw from a high of 150.16 all the way to 147.27 is actually not a bank intervention. That shows that the market is very skittish. Once the market break 150, there was this move here, and this could be, for all we know, rumor related. But topside, I think the market will still have potential to even test the high end at 152. Okay, so do watch out if the market ever go higher, but I'm getting ready to sell if the market actually goes back up into, let's say, for example, 149.65. I'm getting ready to sell. Okay, because if I'm wrong, I'm just going to cut my losses just above 152, 150, 151 levels, and I'll take my chance to the downside. Okay, and dollar Canadian seems to have rebounded very nicely, although we have a bit of a pullback from 137.85 levels. And by and large, I do expect it to continue to rebound to perhaps 138.10 to 138.60 levels. So again, this area here should offer some kind of resistance going forward. And over in crude oil, we still see prices continue to trade to the downside. We have no rebound yet, but I think that may change going forward. The market is now currently trading at $82.69 in the WTI futures, and I think support should be lurking between $80.90 to $82.10 level. So I'm getting ready to buy. The market dips into this level. I'm just going to see if I can find a reversal pattern in a lower time frame, and I will take my chance, because I think overall the case for further rally in crude oil remains very much intact. Okay, and over in precious metal, I also expect some kind of rounding bottom here. You can see that the market has stabilized very, very well and it's getting ready perhaps to even to rebound. So like I said, tonight could be the night in which all of markets that have been suffering throughout this last 2 weeks may have a chance to rebound. The low so far traded for spot gold is $1,814.80, and we have a bit of a bridge here at $1,812.88. So nothing to be worried here, because I think the market is getting ready to trade to the upside. Again, upside potential is probably going to be kept around $1,880. So do not expect a runaway rally. Okay, over in silver, again, very much the same thing that we are seeing in gold. It seems the market is stabilizing and is getting ready to rebound. Okay, if we do get a rebound, I would think that there's a very good chance market may actually do this. Okay, and thus perhaps even a 38.2 retracement. So that remains a possibility. 38.2, let me see where it is here, and perhaps 50%. Okay, so anywhere between these two levels, I think this is the ringgit, sorry, this is gold based in ringgit. I'm so sorry, this should be the one. Okay, spot silver should be able to actually go higher. Top side is about $22.11 to $22.21. So I'm getting ready to buy silver as well. So do watch out for a more significant rebound. Over in Bitcoin, we see there very little. Market was actually pulled back from the high of 28,565, and is currently trading just at about a midpoint of 27,500. So again, there should be some kind of support here at 20,060 to 27,000, no, 27,060 to 27,325 levels. It still should be able to offer some kind of support, but again, we have to see what happens. In the meantime, I'll see you early next week. Bye-bye.